Take profit is what separates successful traders from the rest, and there is a formula for doing it correctly, and today I will show you exactly how to do it. Let's get started. First, it is important to understand the trader's psychology behind take profit. Most traders take profit because of the following: because of the fear that the market is probably about to turn, or because they have made some profits and now they don't want to lose those gains they've made. Some take profit on the next support and resistance zones or areas. Some take profit because of economic news that are out, and many more. As much as these ways of taking profits are reasonable enough, but there is a better way to do it. Let's dig deeper into it. In the market chart, there's always areas where activities happened. I call these areas of interest because this is where the market made some interesting activities in the past. These activities are either the market stopped and retraced in the opposite direction, or the market stopped and made a pullback, or the market stopped and consolidated or made some smaller range before continuing in the original direction. All these are somewhat valid areas where you could take profit, but how do we know which one is going to work? How do we know which one you can trust and always use in order to be profitable? Well, here's how you will know. First, before you enter your trade, assuming you enter the trade after the pullback, then look for the areas where there were activities with volume popped above the EMA alongside the pullback trend. Then mark those areas as areas of interest, because this is where your potential take profit will happen. So basically, I decide whether to take profit or not based on the risk-reward ratio calculation, which is based on these potential take profit areas. Otherwise, if my ideal risk-reward ratio is not possible in connection with my take profit area, then I don't take the trade. Also, what is important to take note of is when your trade approaches very close to your area of interest, make sure that you monitor your trade closely, and if possible, move your stop loss to break even. This is because sometimes the market turns around very quickly if there is some news event that is happening at that time. Another important thing about take profit area is that your take profit price should be right at the beginning of the take profit area, so that you get filled early before an unpredictable situation happens. Check out this best video about pullback entry, and please like and subscribe.